Hi, I'm Jonathan Wild, and we are going to cover how to account for warranties. So when you buy something expensive, like a new car, many times it comes with a warranty. A warranty is a company's guarantee or promise that defective products will be repaired or replaced. Warranties last for a specific period of time, like 90 days or even 5 years. Now, the accounting for a warranty from the seller's perspective can be a bit tricky. This is because the seller reports the expected warranty expense in the same period the sale is reported, not when a warranty claim is actually made. This will all make more sense with an example. So let's assume we sell a car for $40,000 on December 1st, with a 1-year warranty or a 12,000-mile warranty covering parts. And based on analytics of the cost and likelihood of repairs, we estimate warranty expense to be 3% of the car's selling price. Therefore, in this case, we take the car's selling price of $40,000 and multiply it by 3% to estimate warranty expense of $1,200. Now, because warranty expense is recorded in the period when the product is sold, we record an adjusting entry at the end of the accounting period on December 31st. We debit warranty expense for $1,200 and credit estimated warranty liability for $1,200. Warranty expense is reported on this year's income statement, and the estimated warranty liability is reported on this year's balance sheet. Now, assume next year, on January 25th, the customer brings in the car for repairs covered under the warranty. The replacement parts cost $500. So we record the entry with a debit to estimated warranty liability for $500 and a credit to parts inventory for $500. The debit to estimated warranty liability reduces that liability on the balance sheet. The credit to parts inventory simply reduces that asset account. But now look closely. Notice that no new expense was recorded when the customer brought in their car for repairs. The warranty expense for the car was already recorded in the prior year when we made the sale. We do this in accounting because the revenue and expense of selling the car are then both reported in the same period.